Are you still returning checks to the person who requested the payment? It's a really poor practice. Stick around while we tell you why it's such a bad practice and share 3 tips that will help you eliminate that weak process in your organization. Welcome to Accounts Payable Soundbites, the program where we share tips and explain simple and complex accounts payable issues in short, concise soundbites. So why is returning checks to the requisitioner or the person who placed the order such a bad practice? Why do I make such a big deal about it? Well, there are a number of reasons why it's bad. Number one, it wastes a lot of time in your accounts payable department. Your staff has to pull the checks out of the normal production process. They have to track, they have to call or email the person who's requested the check. Then when the person comes down, they have to get them to sign. A whole lot of additional manual, non-value added work just to give the check back. And it's a weak internal control. Why is it weak? Well, number one, it can lead to fraud. It's one way that will facilitate fraud if somebody is so inclined. Additionally, you have additional work, even more work, when the checks get lost. How do these checks get lost? And they do get lost all the time. Frequently, what will happen is an executive will send an admin down to pick up the check. They pick up the check, they bring it back upstairs, they put it on the executive's desk, who sees it, maybe, maybe not, puts it aside, papers get put on top of it, and before you know it, everybody's forgotten that they picked up the check and it's on the desk. And then the vendor is calling, complaining about they didn't get payment. So the checks get lost that way. On occasion, there have been some funny stories. We don't have time now because I'm trying to keep this short about checks that have gotten lost, but executives have been known to lose those checks before they get around to delivering them. So all in all, a weak internal control, a weak practice, an inefficient practice, one you want to eliminate. Now, before we get to those 3 action steps that you can take to get rid of this practice, I want to invite you to subscribe to this channel and hit that bell to be notified of new episodes, which we post 2 or 3 times a week. Okay, so what can you do? Real simple solution, convert to electronic payments. If your suppliers are accepting electronic payments and you're paying them that way, there's no check. There's nothing to pick up. The problem goes away. So a side benefit from moving to electronic payments. There are many other benefits. Number one, refuse. Try and get management support to back you on this. And if you can't, get internal or external audit involved. Let them explain how it's a weak internal control. And consider this. If you went remote during COVID, you were not able to return checks when people were working from home, and somehow everybody got along fine without getting those checks back. So you might want to bring this up if people are pushing back. Now, before I close, I just want to point out that in reality, in some businesses, not all, you will occasionally have to return a check to a requisitioner, but there should be a real strong business reason for it, not just, oh, I would prefer to get it back. By the way, you might also get some value out of episode 98 of our podcast, focusing on accounts payable best practice and 3 no-cost technology tips. If you're watching this on YouTube, which of course you are, a link will appear momentarily to the left. If you like this episode, by the way, we always appreciate those subscribes, thumbs up, and shares.